Hey everyone, welcome to the 60 decibel session. If you're looking for an answer to what do clients say about their microfinance and fintech experience that leads us to believe they are catalysts for inclusive finance, then you're in the right place. My name is Devin and I lead the microfinance index at 60 decibels, and I'm here with Lindsay Smalling to share some of 60 decibels tidbits and data that starts to answer this question. Lindsay, what is our plan for the next 20 minutes?
Hi, everyone. Thanks for spending some time with us. Devin and I are going to talk through two inclusive finance tools. So first, microfinance, which has been sort of the historic golden child of inclusive finance, and Fintech, the new kid on the block, which is getting a whole lot of attention. In the past year, 60 decibels has spent time talking to clients of both fintechs and microfinance institutions, and we're learning a lot by collecting and analyzing these significant data sets. So we're talking about more than 30,000 clients. We're able to uncover global themes in both sectors. So Devin, why don't you walk us through how and why the 60 decibels microfinance index started?
Sure. So by 2021, we had already spoken to more than 45,000 financial inclusion clients, and we learned about a lot about what topics matter most to NGOs, investors, financial institutions, and most importantly, what mattered most to clients. So it was really based on all of this work and then with consultation with experts that we wanted to boil it down to the essential and common elements of microcredit impact. The result was a standard 35 question survey that captured client level outcomes across 6 common dimensions of impact that mattered most to nearly all financial service providers and clients in microfinance. The dimensions of impact include access, business impact, household impact, client protection, resilience, and agency.
Awesome. And so now we're in the second year of this initiative. What is new in the data this year that we didn't find last year? What do we now know with certainty about microfinance from this data?
Yeah, we learned a lot from the first iteration, and then from feedback of financial service providers, investors, and sector experts, we refined the index further this year. And there's 3 big changes that led us to new data. First, we collected additional MIS data on the clients, like their most recent loan size, if it was a group or an individual loan, and the year of their first loan with the FSP, which allowed us to understand the client tenure. The MIS data allowed us to cut and slice the data in different ways to understand how client profile characteristics interact with social performance outcomes. So now from this year's data set, we can say with a lot more certainty that clients who have been with their FSPs for longer tenure report stronger individual, business, and household outcomes. We also know, yeah, we encourage the financial or the tenure of clients. We also know that group lending clients report a better experience with their financial service provider and report higher client satisfaction compared to clients with individual loans. And then really important for the sector, we know that when clients who use wraparound services like savings accounts, training, insurance products, in addition to their loans, report stronger outcomes individually for their business and in their households.
Can you say a little bit more about that, that last point? Why is that so important?
Yeah, we're really excited about this one because for a long time, without necessarily the data, investors were taking a risk on wraparound services. So on financial service providers that provided services beyond credit, there are many hypotheses that offering bundled or comprehensive financial services beyond credit is better for the client and for their financial inclusion, but not necessarily with the substantial evidence to say that. So we have that data this year.
Awesome. Okay. And so what are the other 2 changes you mentioned in the index this year?
Yeah, so second, we moved from a global index last year and global benchmarks to regional comparisons. And even in some instances, we now have country benchmarks. After the first iteration of the index, we heard a lot of feedback that it wasn't necessarily fair to compare a financial service provider in Nigeria to one in Bolivia. And that's totally true. They operate in completely different contexts and regulatory states. There's a lot of differences between those contexts. And so this year, the indices are regional comparisons, and we hope that in the future, there'll be more indices by country, leading to more like-to-like comparisons for the financial service providers and really eliminating a lot of the external possibilities for differential performance among the countries. And so to be certain that the differences that we see in outcomes are really because of different social outcomes. So this slide here is really exciting because we were able to provide country benchmarks for 5 countries this year, which are on the screen. And then next year, we hope to reach at a minimum 5 more markets like Nigeria and Bolivia. And then the last thing that's really exciting this year is we're trying to answer the question of what is possible. And with this, we're highlighting the top performers in our data. So a common question that we hear is, what should financial service providers aim for? What should they be trying to achieve? And that's been a really tough question to answer. So we can start by sharing data on what's possible to acknowledge what best performance looks like and understand, what policies or strategies or products those financial service providers use so others can learn from them.
Yeah, it's really, it's been such a goldmine of data for the microfinance sector. So how are we seeing, on those notes of performance and other things, how are we seeing financial service providers and investors engage with this data?
Yeah, I would say benchmarks are the most frequent way the financial service providers interact with our data. The ability just to provide those in the 5 countries this year and the feedback we received from that was astounding because there's a way more confidence in our benchmarks to know that I'm being compared to financial service providers that are operating within the same environment that I operate in. So they're way more confident in the benchmark comparison, and it gives them the ability to look at where they're performing below average for some targeted improvement. So they can say, this indicator is a lot lower than I anticipated. What can we change in our policies or processes to specifically target that one outcome? And then celebrate where they're achieving beyond the 60 decibels benchmarks and doing really well. And then on the other side, for investors, the standardized indicators and the survey tool and the benchmarks really allow them to make comparisons across their portfolio and to understand their aggregate portfolio performance. And our hope is that this data is used to set social outcome performance targets.
It's been so exciting to see this initiative grow and improve every year. One thing I'll note is that since year 1, as we've been going out to leading financial institutions, financial investors, to invite them to participate in the MFI index, we've also had a lot of folks asking for a fintech index.
Yeah, definitely. I'm curious to see, Lindsay, how the fintech landscape for comparable customer impact data might be different than my experience with the microfinance index. And, not all fintechs are focused on inclusive finance or positive social impact in the way that it's technically kind of really in the DNA of microfinance. And so which investors and fintechs are interested in this data?
Right. Yeah. Fintech is kind of impact neutral, right? It's just technology for financial solutions. So through the different fintech projects that we've done to date, we've seen sort of a range of motivations for collecting feedback from customers. So some of it is to advance impact measurement, to deepen customer insights, understand the positive outcomes for customers that have resulted from having access to a product or service. And that looks a lot like a standard 60 decibels project. It's usually for clients that self-identify as focused on inclusive finance or positive impact, like this amazing set of clients, Axion Venture Lab, Quona, Flourish Ventures, so many others. I think in that use case, Quona, for example, has been supporting a handful of portfolio companies each year to conduct 60 decibels projects for the last few years. And it's wonderful. They publish those insights in their annual impact report. So you can take a look at them there. And even though these companies have very different business models, the approach that we've taken has delivered comparable data on first access, inclusivity, quality of life changes. And this really is allowing deep Kona to deepen their impact management, both in the way they engage with the companies and the way they look at their portfolio overall. But what's also been interesting in this fintech space is that more projects in the fintech space are starting to come in from sort of traditional investors who maybe don't even have an impact measurement practice. And they are more focused through our data on understanding risk. Our survey tools and sampling approach are actually really easy to adjust to gather these insights. It already sort of, as you saw in the microfinance index, we look at consumer protection, but we can just sort of deepen those modules and make sure that we're really listening to defaulted customers, for example, or folks who have maybe used a fintech service once and moved away, really focusing on understanding risks that might be hidden sort of there. Because financial technology is less regulated and it's growing so quickly, there's two risks, I would say, that are very present but undefined. So first, there's the risk that this rapid customer growth of fintech globally, is overshadowing risks to consumers, and that that we're just missing stuff, and that we need to be taking a closer look. And second, sort of because of that, there's this pending regulation of fintechs that's hanging over this ecosystem in many countries, because the laws and the consumer protection guidelines are really just trying to catch up to the reality on the ground. We think that listening better to customers has an important role to play, both for informing that regulation and just really helping companies and investors know what the reality is for their customers and stay ahead of that regulation. So we're seeing that more of these customer studies are being requested pre-investment, so during due diligence, because rather than being part of an impact measurement practice, it's really that investors want to fully understand these risks before committing to a deal.
Interesting. So the purpose is definitely twofold and maybe different from the microfinance index, but do you see it evolving, that the way that the microfinance index at 60 decibels has as basically a global index that enables comparability across fintechs, or something different?
Similar and different. So as you said, the benchmarking and the comparable performance is really powerful. It helps capital flow to the companies that are having the greatest impact, inspires companies to become best in class. So that comparability is key, but we have the benefit of learning from your experience with the MFI index that the comparisons that are most relevant and meaningful are among similar business models in the same country or region. So compared to microfinance, but also just generally, fintech is such a huge, diverse global sector, tons of different business models within there. So we're going to focus initially on fintech lending products, which is definitely a huge section of the fintech landscape, and focus on 6 countries where the majority of inclusive fintech investing is happening. Right now, that looks like Mexico, Brazil, Kenya, India, Indonesia, and the US. And there's different sets of investors and stakeholders, et cetera, in each of those ecosystems. We anticipate that rather than a global initiative and report, this will actually be a series of country-level reports. So, of course, we're happy to do fintech projects in any country, but we're excited for the ways that really focusing on these specific regions from the start can make customer experience and outcomes a key input for decision-making in these markets.
Super exciting. And I think just taking a lot of learnings from our previous initiative to make them applicable to different sectors in space. And I guess if I were to just summarize that, these microfinance and fintech data sets really allow us to discover like what's working in a context, point out maybe what's not working so well. That's really relevant when they're in country specific areas. And of course, by listening better in a standardized and consistent way, and then comparing that like-to-like performance of institutions, I can agree that gets us to better data that helps companies and NGOs and investors serve their clients better, improve products, or even understand risks, and ultimately improve lives. So
definitely.
Thanks for joining us.
Thanks, everyone.